traditionally, within financial inclusion, obviously the gender gap has been a challenge and an issue that has been of longstanding concern, and it's been so within the traditional economy, but this is now extended into the digital economy. And there's been a great deal of focus over the past several months during the pandemic at looking at this issue and trying to understand what's been the impact of the issue. And certainly in the US and in Europe, there's been a great deal of concern that the pandemic will actually grow the gender gap, increase the gender gap. And there's already evidence from various studies that that's the case. And there's headlines that I'm sure many of us have run into, things such as saying that the pandemic will take women back 10 years in the workplace. And while this has been a topic of great focus in the West, it's also been a topic of great interest in Africa. And interestingly enough, there is some indication that while the gender gap is widened in the West, it's actually decreased in certain parts of Africa over the past year or two, and which is of course wonderful news. And so a focus of this discussion will actually be, rather than talk about sort of high-level policy objectives, which are well known in terms of what various markets are aiming for and countries are aiming for, what we're going to try and do is get into the data. And we're very fortunate to have speakers with us today who have participated closely in these issues and have also undertaken studies which provide us fresh information, fresh data that we can dig into that helps highlight what has been transpiring within Africa over the past year or two. And specifically, we're going to dig into a couple of markets, Zambia and Mozambique, and as well as get an idea of trends across other markets in order to really understand, get a sense for the figures and the numbers and the implications of them when it comes to the policy and when it comes to implementation considerations, which are very important. I encourage everybody during the session to note their questions in the chat, and these questions will be addressed when there's an opportunity to do so. I also want to thank our participants in the session and the discussion. We look forward to hearing from you, and especially I'd like to thank FSD MAC and FSD Zambia, our partners in organizing the Mondato Summits. Some of you may not be aware, but we were meant to have a Mondato Summit Africa in Maputo in April, past April. Obviously, the pandemic did not cooperate with our plans. We will announce in due course when the event is to be rescheduled. But while we wait for sort of physical normalcy to return and to allow us to step off the digital platform, we're very happy to be able to continue to engage all of you in these webinars. And so this is the second webinar. And with no further ado, allow me please to hand it over to Catherine of FinEquity to get us started. Catherine, please.
Thanks so much, Judah. Good morning, everyone. It's a pleasure to be here. My name is Catherine Hyatt, and I am the lead of digitally enabled financial inclusion at FinEquity, which is facilitated by CGAP. So today I'm going to talk to you about the role of social norms in closing the digital gender divide. And I think Ariel is going to move my slides for me because we had a little tech quirk. So if we can move to the next slide. Ariel, what is the digital divide? So the digital divide, most of you I am sure are quite familiar with this, but it is the gap in access to and use of modern technology between the underprivileged members of society, especially the poor, rural, female, elderly, and differently abled, and their more privileged counterparts. Next slide. So, as I'm sure you're aware, we've seen a proliferation of mobile phone ownership over the last decade. And, you know, we're sort of seeing this exponentially grow across all income groups. So looking at this graph, we can see mobile phone ownership, which is shown in mobile subscriptions, is, you know, even if we look at the most conservative estimates, it's growing. And even our medium estimates have mobile phone penetration approaching universality by 2026 amongst low income countries. And this is data which is, this is ITU data, which CGAP has sort of created scenarios on for the next decade. So we're sort of seeing this increasing ubiquity and this, you know, 100% plus access. And next slide. However, when we look at phone ownership amongst women, and particularly smartphone ownership, we really see this gap, this stubborn gap, which doesn't want to move. So here we're looking at several countries across sub-Saharan Africa and Southeast Asia, disaggregated by gender. So you can see these gaps. You can see that women would be disproportionately impacted by smartphone connectivity, you know, compared to men. So when we look at countries such as Nigeria and India, you can see that the gap will be as high as 32 and 23 percentage points, respectively. And there's no reason to imagine that these gaps are going to magically disappear in the coming years. We really, if we want to see women having equal access to mobile phones, we really need an intentional agenda on gender and dedicated efforts to really geared towards women's access to mobile phones. Go to the next slide. So, gendered social norms. This is something that I hope you're hearing about a lot, and I hope that you're familiar with, but really gendered social norms are the collectively held expectations and beliefs about how people should behave and interact in specific social settings and during different stages of their lives based on their sex. And looking at the next slide, which is the average gender gap and perceived barriers, we can see that gendered social norms are really, they are driving these big gaps in use of mobile internet. If you look at this giant pink block in the middle, which is around family approval, so there's a 154% gap in this factor of, in this social norm factor. So, you know, put simply, if we have 100 men who say that their family does not approve of them using or owning a mobile phone, then you have 254 women who would say the same. And we can also look at, you know, a 23% percentage gap around harmful content, and you know, just a gap around relevance as well there. So women are less likely to believe that mobile phones are relevant to them. We can move on to the next slide. So here I want to think about how gendered social norms impact the different dimensions of the digital divide. CGAP recently, in late 2020, did some research around the digital divide and the key areas that really limit people's uptake and usage of mobile phones. And they categorize them into 4 different dimensions. So access to handset, internet, infrastructure, and literacy and data availability. Now it's really easy to consider these, to think about these dimensions as quite gender neutral, but they're not. We really need to think about how gendered norms play into these dimensions. You know, as a subset of different roles and a subset of social norms, there really are different roles and expectations that we apply to women as in terms of these dimensions. So if we think about access to handsets, there are, you know, in several countries, and I'm thinking, you know, regarding recent work that I'm doing around Papua New Guinea and the way that mobile phones are attributed to sort of antisocial behaviours. So particularly a woman with a mobile phone is often considered more likely to engage in extramarital affairs, to have a phone friend, which is a sort of a romantic friend which is gained by someone who just calls random numbers until someone picks up. And so really sort of fostering these behaviours which are not looked on well by society within Papua New Guinea. And so this sort of is driven both externally from the community and the way that mobile phones are perceived to, influence women's behaviours, but also by women as well. Women are also don't want to be, they don't want to be connected with such a negative perception. When we think about access to handsets, internet, access to connectivity. So, if you're not able, if the social norms within your village or your community or the group in which you associate yourself with, if they don't allow you to leave the village to get signal, this is going to hugely influence your ability to access and use mobile phones. And if you need to go to an agent to make a transaction, to send money, to make a digital financial services transaction, and you're not able to leave the village to get to the agent, and if the agent is male, how is that going to impact your ability to use DFS or digital technologies? When we think about infrastructure, I'm thinking a lot about electricity. And as we move towards smartphones, we really see the amount of time that it takes to charge a phone, hugely increase from your basic Nokia brick. The sort of the fancier it is, the more bells and whistles it has, the more battery it consumes, and the higher the cost to recharge. You're having to recharge it maybe every day, and again, this is an issue if you're not living in an electrified, if you're not near an electrical grid. So you're dependent on solar solutions, or you have to leave to access somewhere where you can charge your phone. And maybe it costs you more. Maybe you're paying to charge your phone. And this sort of cost element really comes in again when we think about literacy and data availability, because social norms also limit the manner in which we allow women and girls to attend school and to, in turn, achieve literacy. When we are low literacy, even if a phone has audio features, but it's still readily dependent on the ability to read and write. And so if you can't read and write, there is a far reduced use case for you owning and using a mobile phone. And if you can't read and write, your ability to seek employment is going to be reduced. And indeed, when we think about the social norms around a woman's right to sort of work and ability to generate an income, this is going to affect their ability to buy data and to access these financial services, and even to have a use case to use the digital financial services. So we really need to think about this heady mix of the way that social norms, gendered social norms, absolutely impact all of these core dimensions of the digital divide. And so, I mean, this is an area we could talk about for a long time. There is no dimension to the digital divide which is not influenced by the way that society has these expectations and beliefs around how women should behave. I know that we've got a lot of data to get through, and this is a really exciting hour or so. So I'm going to end it there, just as a brief intro. But I would like to invite you, if we could just move to the last slide, to connect with us through Finequity. We have an active listserv, and we have several different platforms that are listed here. Otherwise, reach out to me on the chat and I can add you directly. But thank you very much for this opportunity, and really looking forward to the discussion.
Okay, thank you very much. I don't know if we have any questions just yet. Perhaps as individuals have questions that may come up, please feel free to note them in the chat, and I'm sure that Catherine will be happy to address them at the back end of this discussion. If not, otherwise they can be responded to online. Next, we are very pleased to welcome Professor Abigail Barr of the University of Nottingham. So Abigail, please.
Hello, right, bear with me as there we go. Okay, can you see my screen? Yes, okay, very good. So thank you very much for having me. I'm really delighted to be here. I also need to thank my co-authors, Marlene, Floyd and Linda, and Betty Wilkinson, who started this all off by asking me to think about gender and financial decision-making in Zambia. So I'm going to present the results of a study that we were in the field in, let me see, August 2019. We're hoping to go back into the field to replicate and build on what we did here. So all feedback is very gratefully received. We're trying to do something that's really useful. So as a university professor, really useful could just mean publishing an article in a journal for me, but we really want to contribute to the conversation that all of you guys are involved in. So here goes. Okay, so now I have to work out how to progress my slides, which isn't working. Hang on, let's see if I can do it this way. Okay, there we go. So the objectives of this study were to investigate the social norms and individually held behavioural prescriptions that guide and constrain the financial decision-making of men and women, more specifically husbands and wives in Zambia. Our approach was to, first of all, adapt and apply recently developed quantitative methods to identify and measure the content and strength of these social norms and individually held behavioural prescriptions. And then after that, we did some focus group discussions to give us further insights into what we were seeing in our data. But I'm focusing primarily on the quantitative work that we did here. So some important definitions before I go on. Catherine has given you a definition of a social norm, which is actually very close to the one I'm going to give you. We're stressing slightly different things. So first of all, the content of a social norm, the way we see it, is the socially prescribed behaviour for an individual facing a particular set of behavioural choices. Okay. Another important aspect of social norms, which Catherine stressed, I'm going to stress it too, is that they're collectively held by communities. So each community member is highly likely to know what the prescribed behaviour is, expects a large majority of other community members to also know what that prescription is, and is highly likely to disapprove of and may punish deviations from the prescribed behaviour. So the strength of a social norm, this is how we define it. So first of all, it can be defined as the extent to which social approval declines as an individual's behaviour deviates from the behavioural prescription. So how quickly do people start being satisfied with somebody as their behaviour moves away from this should prescription of behaviour? Strength can also be linked to the likelihood of or severity with which an individual who deviates from the behavioural prescription is punished by members of their community. So the punishment could be just a dismissive look as they pass in the street, or it could be much more severe. Another way of thinking about the strength of a social norm is the strength of the correlation between the behavioural prescription and the actual behaviour. And we think that strength is important because if a social norm exists, but it's not very strong, in other words, people don't really care about people deviating from the social norm, then it's not something we should be concerned with from a policy perspective. But if a social norm is very strong, then we've got to think about changing it if it is constraining the behaviour that we think needs to change in order to improve people's welfare. And of course, these three elements of strength are interrelated, which is something I'll hopefully get time to come back to later. And finally, individually held behavioural prescriptions are also shoulds, they're also prescribed behaviours, but they're not collectively held. So this is what an individual thinks they should do, but it's a personal matter, and these are likely to vary a lot, even within communities. Okay. So why is the distinction between social norms and individually held behavioural prescriptions important? So before we can facilitate behavioural change, we need to know what is guiding and constraining that behaviour. If social norms are guiding and constraining the behaviour, then we need to think about changing social norms. This can be difficult because social norms are held in place by guilt and shame and the threat of peer punishment. So to change social norms, we need to work with entire or large parts of the communities to which they belong. So we need to come up with interventions that facilitate coordinated adjustments. Everybody changes together, because if you have a few members moving to a different social norm while the other ones are holding the previous social norm, you're going to get conflict and disapproval and quite possibly reversal back the earlier social norm. So moving on to individual held behavioural prescriptions, if these are guiding and constraining behaviour, you do not have to engage in this coordinated adjustment at the community level. However, it may require more than simply working with the individuals whose behaviour you want to change. And specifically, suppose that an individual deviates from an individually held behavioural prescription that is important to an other person in their life. And specifically, we're thinking about their spouses here. So if they change their individually held behavioural prescription and so change their behaviour, their spouse may become disapproving and may then, that can lead to discord and potentially punishment and all the rest of it. So in this case, successful behaviour changing interventions need to be directed at both those whose behaviour we wish to change and those important others whose individually held behavioural prescriptions, as they pertain to one whose behaviour we need to change, also need to change. So that, if you like, is the slide is called "Why is the distinction between social norms and individually held behavioural prescriptions important?" But it's also giving you a flavour of our theoretical framework in which we engaged in our quantitative empirical work. So our methods in brief. So we engaged 352 married couples across 22 villages in Eastern Province, Zambia, in a series of specially designed decision-making and evaluation tasks involving real money and a short survey. And I'm actually going to be focusing very much on the tasks rather than the survey in this presentation. I'm not going to be able to say very much about the methods in the 20 minutes. I will come back to them if I find I've got a bit of spare time at the end. Task 1, in brief, was designed to reveal the extent to which spouses are willing to sacrifice household level income in order to maintain individual control over income, and whether they are willing to sacrifice more household level income when they can keep their actions and income secret. Okay, so this keeping of secrets is important here because this is a behaviour that we associate with an individual who's doing something that violates the norm or is not in line with the individually held behavioural prescriptions of a significant other, within the context of our research, their spouse. So the other tasks that we got people to engage in, they were designed to reveal the social norms and the individually held behavioural prescriptions and give us specifically this measure of strength. And if I have time, I'll go through some of these in a bit more detail. So all the tasks were designed in a way that would allow us to investigate gender differences in the social norms and individually held behavioural prescription, both the strength and the content of these. And this allows us to answer questions like, do the same social norms relating to financial decision-making apply to husbands and wives? Do social norms that are the same in terms of content for husbands and wives differ in terms of strength, depending on whether they are being applied to and by husbands and wives? So imagine there's a social norm, you shouldn't save money by hiding it at home. We can then look at whether if a wife deviates from that, people are more tolerant of that than if a husband deviates from that norm. And we can also look at whether the wives are more tolerant of wives deviating from it, but the husbands aren't. So this is where gender starts to loom large in our work. We can also answer questions like, do individually held behavioural prescriptions relating to financial decision-making vary systematically between husbands and wives? Our survey was very much about individual characteristics and financial service use. And as I say, I'm not going to focus on that at all. What I'm going to do now is give you some of our findings. So the first finding, husbands and wives often sacrifice household level income in order to maintain individual control over income. This is a sign that they don't think that their preferences are going to be met if they hand the money over. So just digging in a bit deeper, on average, in the first task, husbands and wives prefer to have 37 Zimbabwean dollars, are they? Sorry, I've forgotten. Zimbabwean dollars in their own hand rather than 45 Zimbabwean dollars in the hands of their spouse. So on average, in other words, they were prepared to sacrifice 70% of household income within the context of the task in order to be the one in control of the money. So this, if you like, is a measure of the size of the problem in terms of disagreements between husbands and wives, how money should be spent, and hence I want control over this so I can spend it how I think it should be spent. So next, when they knew that their spouses would find out about what they did in task one, the wives and husbands were similarly willing to sacrifice household level income in order to maintain individual control over that income. However, when they knew that they would be able to keep their decisions and the income from the task secret, the wives became even more willing to sacrifice household level income. So this secret keeping is a signal that wives do have worries about the consequences of their actions. So they think that they're violating either a social norm or some should ought that their husband has in mind relating to the wife's behaviour. They're trying to avoid some sort of punishment or backlash there by doing something in secret. Okay, and of course these findings lead to questions: are social norms guiding or constraining behaviour here? Specifically, are social norms being violated, and are individually held behavioural prescriptions, and more specifically interspousal differences in these prescriptions, driving behaviour, specifically the secret keeping, possibly the just maintaining control as well. So that brings us on to finding B, which is that individually held behavioural prescriptions and interspousal differences in these prescriptions were indeed driving behaviour in task one. So we found no evidence of social norms impacting on task one behaviour. What we did find is that spouses' own decisions in task one aligned to a degree with that spouse's own individually held behavioural prescription. So when they knew that their spouse would find out what they had decided in task one, both the husbands and the wives also took their spouses' individually held behavioural prescriptions into account. So they compromised to a degree. not that much. Well, yeah, no, they did. They only wasted 17% of the income. So we can assume they would have wasted more if there wasn't this compromising going on. When they knew that their spouses would not find out what they had decided and the income they received for task one, they did not take their spouses' individually held behavioural prescriptions into account. So that the secret keeping that we see, especially, or the use of the ability to keep secrets that the wives took advantage of in task one, does appear to be to do with these disagreements between husbands and wives about the shoulds and oughts, about whose hands money should be in. Okay, so what were the individually held behavioural prescriptions here? So first of all, wives and husbands agreed, this is the majority of them, not all of them, that it was inappropriate for husbands to sacrifice household level income in order to maintain individual control over income in task one. Husbands thought it equally inappropriate for wives to sacrifice household level income. However, wives tended to think it appropriate for wives to hold on to the income they received in task one and to be tolerant of wives sacrificing household level income in order to do this. So there's the disagreement between husbands and wives that is driving real behaviour, albeit in a task that we invented rather than a day-to-day task. Finding number two, so now we're moving a little closer to real-world decisions. Handing spare cash over to one's spouse is good, but it is understandable when wives do not do this. So here we did find strong evidence of a social norm prescribing that husbands should give their spare cash to their wives. Both wives and husbands acknowledge the existence of this social norm. A corresponding social norm prescribing that wives should give their spare cash to their husbands might also exist. So there's a signal. The evidence was weak here, but it looked like the same social norm might exist. However, especially wives, but also husbands, were tolerant of wives holding on to spare cash. So if the norm also applies to women, there was greater tolerance of them violating the norm, i.e., well, or deviating from it, let's say. So this then begs the question, why did many husbands hold on to the cash in task one? This is cash that we gave them to engage in the task, so it could be considered spare. So why did they hold on to the cash? Why did they violate the norm? So in focus group discussions, the husbands constantly made reference to wives are wasteful. So I violated the norm because there were other factors that came into play. Finding number three, saving is good, saving in secret is bad, and for wives may lead to a backlash. So the large majority of the people we engaged with thought it very appropriate for both wives and husbands to save. And here we were focusing specifically on either joining a savings group or using a mobile money e-wallet, okay? There was strong evidence, however, of a social norm forbidding saving in secret from one's spouse. Both wives and husbands acknowledged the existence of this social norm, and it applied both to husbands and wives. Wives were especially intolerant of husbands violating this social norm. Both wives and husbands, but especially wives, tended to be more tolerant of violations by wives. And this tolerance of secret saving by wives notwithstanding, just under 1 in 3 wives, so around 32%, and 1 in 6 husbands thought that a man would be justified in beating his wife if he discovered that she was saving secretly in an e-wallet or had secretly joined the savings group. And that, by our calibration, put this secret saving on a par with neglecting the children in terms of justification for wife beating. Then, just to add something from the focus groups here, they strongly indicated that when a wife saves in secret, people, including husbands become suspicious about how the wife got the money that she's saving. And so this might be a reinforcing factor here. No such comment was made about husbands saving in secret. So that's now we get to my first stopping point. I haven't shown you any pretty graphs or anything, which saddens me a lot because I have lots, but they all take rather a long time to explain. So here is where you can find the full report, which goes into our methods and our analysis in a great deal more depth. So I think I'm probably out of time, so I should stop. If anybody wants me to dig in on some of the methods, I have slides prepared to do that, but I'm going to try and work out how to stop sharing. Now, how do I stop sharing? I don't know how to stop sharing. Oh, here we go. I'm going to stop sharing. There. Oh, there's something in the Q&A.
Yes, I'll just I'll pose this question to both Professor Barr and Katie from Inequity, but the question is, what are the best levers for narrowing these gender ownership gaps? Are they demand side or supply side? And I see that Katie's just replied, but perhaps she can chime in and speak to it a bit. And then Professor Barr, if you'd like to add, feel free.
Hi again. Sure. I mean, I think that they're both demand side and supply side, but I think that it's important to note that they often have a cascading effect and can sort of nudge each other. So, you know, if cost remains a huge barrier for women, particularly if they're sort of less economically empowered, have less economic resources to buy a device or pay for services, and this creates a real barrier for them. I think policy around cost and Asian networks are all also important. But I think one thing that always strikes me as missing for a lot of the sort of the advertising, marketing, and ways that digital financial services or digital is pushed on women is a sort of lack of a use case that actually resonates for them. And when you sort of see these marketing campaigns from mobile operators or FSPs, which they just are not really in sync with the realities of the people that they're trying to serve, particularly women. And I think that where you have a strong use case, that you have a greater chance of influencing norms. And my colleague, Nisha Singh, who leads our work on social norms, has made the really good point that norms are not static, they can change. And I think that we really, we want to sort of acknowledge the role that these other factors, these external factors, can play in moving some of these norms if suddenly families may sort of see the value in a use case. And particularly as we think about COVID, there are these kind of times of upheaval and these sort of very unique moments when everyone is really in much more of a survival mode. They are opportunities to change norms. Often the ways in which we do things are relaxed or they're up for discussion. And so, this is an opportunity that perhaps, where there are government subsidies or stipends that are available, there is a possibility that the use case for a woman having a mobile account, particularly if the government prioritizes any payments going to the female head of the females at the head of a household, then we can really see a strong use case for a woman having a mobile phone. So it's a kind of a tricky mix of demand and supply side, but one definitely influences the other.
Okay, so I just want to add a few things. So in particular, and one of the things we think that our results are showing is that, you know, one can make a case for helping women save and do so in a way that their savings are protected from both their own self-control problems, but also from being acquired by proximate others, including spouses and family members. But if that involves then keeping those savings secret, then our results suggest that we are exposing them to, well, encouraging them in situations where they could be harmed. And this is, I think, a very strong argument for us working with people to change the normative environment. And in some cases, that means working with entire communities. In other cases, it could be working with couples, trying to, and using something Catherine said here, introducing this idea that it may be beneficial for husbands to trust their wives more, because wives can do very well with micro businesses and so on and so forth. So I think it would do a great deal of good to start to harvest data to make these cases, you know, so the value of micro enterprises, not only to the women who are running them, but to the household and hence to their husbands and families as well. And we can hopefully start to then use those to change the normative environment. So make use of what you might call a feedback loop between the normative environment and the outcomes, and vice versa. Anyway, I better shut up now. Thank you.
Thank you very much for the question and for the very insightful feedback and responses on that. We now turn to our panel discussion, which will be focused on the FinScope findings from 2020 and comparative takeaways across Africa. And on this panel, we have CJ, Chief Investment Officer, Women's World Banking Asset Management, Selena from FSD MOC, Chief Executive Officer of FSD MOC. We have Betty Wilkinson, Chief Executive Officer of FSD Zambia, and Sophie Mills, Director of Programs, Planet Finance. And please, CJ, take it away. Thank you.
Thank you. Thank you very much, Judah. Can everyone hear me?
Yes.
Good. Okay. So thanks. Yes, and welcome to this panel discussion on the recent FinScope findings for Mozambique, which was completed in 2019, and Zambia, which was completed in 2020. So those two FinScope findings offer an interesting perspective since they're close, both in geography and in time, but they straddle the COVID pandemic, i.e. before and during. So it's fascinating to see what they can tell us about the state of financial inclusion, the role of technology in driving it, and the implications for women, given both the traditional gap in access to finance generally and the digital divide, and all these comments that the speakers have just laid out the case for. So yes, I'm CJ Yuhas. I'm the CIO, of Women's World Banking Asset Management, and we are a gender lens investor seeking to use our investor influence to encourage financial institutions to develop products and services that are designed to overcome these gaps and divides. So needless to say, we're huge consumers of this FinScope research, and it's been a fascinating discussion so far. And I'm really excited to moderate this panel of experts and dedicated allies of financially excluded people, especially women, that we have assembled here. So if I could just, Judah has introduced our panelists, but we are really benefiting from some expertise. Selena, CEO of FSD Mozambique, is going to be presenting briefly the 2019 findings of Mozambique. She's bringing 10 years experience also at the Central Bank of Mozambique, where she was the Executive Director of Payment Systems and responsible for drafting the National Financial Inclusion Strategy. And then Betty Wilkinson is going to representing the Zambia study. She's the CEO of FSD Zambia and currently chair of the 9-member FSD network across Africa. She also brings 30 years of development expertise, including from the Asian Development Bank, where she, among many other things, led the organizational financial sector reform and innovation. And then we're joined by Sophie Mills, who is FSD Network's incoming gender lead and also brings 15 years experience in inclusive finance and gender mainstreaming across the African continent. So I will, without further ado, turn it over to Esselina to present the FinScope findings of Mozambique.
Yeah, good afternoon, and thanks to Mondato for giving us the opportunity to have this webinar, and thanks Christian to introduce me. For this afternoon discussion on FinScope results, I was thinking that as we are discussing issues related to gender and the gender gap on financial inclusion, I will only present the results of FinScope having the lens for gender. And I have organized my my presentation in the way that I will talk about the results in terms of financial access trends, the uptake overlapping in terms of product, what results are we getting in terms of access to media and communication, and somehow will be related with our first presentation when we talk about the digital divide, because all issue of financial inclusion is also related to digital finance, and digital finance is related to communications tools. What are the barriers for those people that are excluded? And then I will be ending with my final consideration. When I'm having here, I think that, yeah, I have to move this, yeah. From our financial consumer survey, the FinScope, it was conducted in 2019. The previous one was in 2014, because it's why the comparison that I'm bringing here are between these two times periods. In general, the level of exclusion has reduced in the country, but we still have a long way to go, because we still have 46 people, or 46% are continuing to be excluded in general. And when we are looking to by gender, what we are seeing is that the gender in 2009 has reduced, but still compared with the previous, still there. And the good things here, and what we can say is that it is clear that if we see the other formal services which are not banked, we see that the contribution for women is even bigger. So our reduction of exclusion on financial inclusion has been done by the mobile money and other type of service, including insurance, which are not bank-led. And in that segment, the female are the one that I give more contribution. So it's what the formal financial inclusion is driven, or was driven in 2019 by the non-bank providers or non-bank service, and largely by mobile money. So it is important that what we discussed in the beginning regarding the digital divide is also important to look, because it seems that in our case, the mobile money will be the channel that is going to drive or is going to accelerate the level of financial inclusion in our country. The gender gap in terms of gender, it's remained unchangeable. It's still in 5%. So we didn't have a lot of change when it's coming to gender. In terms of product uptake and overlap, we do have about 2% of people that were participating in this fan scope that are only using exclusively banking service, and 12, they use rarely other formal service. But we see that 25% are doing both formal and informal mechanism of service. This might give impression or give a speculation that it seems that the formal service has not yet meet the all need that those people need, is why they are recurrent to informal service. So it is something that at the level of financial service provider and also at the level of regulator, we need to understand exactly why we continue having people combining formal and informal mechanism of financial service. And 11% of the population only use informal mechanism. So it is here for this overlapping analysis for us clearly show that we cannot use one approach for all, will not work. And yet it is clear that the financial strategy intervention need to be targeted and should be speaking for a specific segment and identify the challenge that each segment might have. When it's coming to the media and the communication device, we have brought that one, and it is interesting to see that in the case of Mozambique, we find that women or females, they are more TV oriented, while the men, they are more on radio. We do have more men using radio than females. And it is interesting because similar study was done, I think, in one of province of Mozambique, and find that women, they prefer to watch television than radio. When it's coming to the phone, which is very important, we find that we still have 80% gap in access to the mobile, to the phone. And here, although we make a comparison and we bring information for basic phone and smartphone, we have to recognize that the majority of our population still use more basic phones, meaning that if it's coming to design product, we need to have that one in account. Although we know that when we are using basic phones, we might have other type of challenge like security that sometimes people using basic phone might have. What are the barriers that mostly we found in our fan scope? It was more lack of income. So people saying that they are not using financial service because they do not have enough income. It was also issue of mobility that is the service themselves, they are not near where they are. It is why the mobile money is taking a driver role. The low level of literacy, and of financial literacy, but we might also include the digital literacy when it's come to digital financial service. And also it was mentioned the lack of documentation, because as all we know, in order to be linked to a formal institution, you need to have documentation. I am also here sharing the time taken by females to reach a destination for different service. A female is taking 100 I have compared rural, sorry, I've compared rural and urban. And you can see that in the rural, the female has taken more time to find an agent. So although the mobile money is contributing to financial inclusion, we are seeing that they still have a challenge to have agents nearby. They still have to work some minutes more than an hour. When it's coming to the branch, the time is getting even more. When it's coming to ITM, it's similar to the branch, because in all branch we do have ITM and we do have a place where you do have ITM outside the branch. Post office at a rural area is completely too far. Grocery store, there is less time spending, and the market is also in the rural area and the medical facilities there. So from this graphic, what I want to attract is that in the rural area where we find more people being excluded and where the majority of female resides, they still have a issue of mobility as a big component or a big challenge in order to reach different service. And it might be why we have also most female in rural area dealing with applying informal service. Regarding the income, it is also clear from us, from the study, that the income for informal sector is coming, the majority people are female that are in formal market, but also they are in farming and they are dependent for other family members to have income. And this is why one of the big reasons is the lack of income in order to access different service. So these are the lens that I want to bring forward discussion this afternoon regarding the FEN scope view, all in the gender lens. But for final consideration, I have to mention that for our FEN scope, it was clear that we needed to do something on SMEs development, because most of the target group that we target, particularly the one that are working in agriculture sectors, they need to have agro-business development, and SME also for their development, they need financial alternatives which are not mostly based on banking system. And that one was clear for our FEN scope, because it was a reduction of credit service in 1920 comparing with 1914. Digitalization is a key component that we need to have if we wanted to change the face of our financial inclusion in our country. And even now, it's become more important in the time of COVID, that the digitalization should be there. And from here, we do think that if we are able to digitalize particular G2P service, and also digitalizing some service in the government side, in the public side, we will also contribute and push digitalization at a different level. We understand that there is a need for female empowerment through the economic development program. And if we manage to have that female empowerment, not just to have access to financial service, but how do we empower female in order to get more involved in economic development program, we do believe that financial inclusion will be also getting a good contribution. There is a need to continue enable regulatory environment, and we think that the regulators in the country, the different regulators, either the regulator for telecommunication, the regulator for insurance, the central bank, they are all, and also the government institution, they are also working in the way to enable environmental, to enable a good regulatory environment. So we think that if we continue to work in that area, we will also have other type of results. One of the things that we found is that from the data that we get from FENScope, there were from the demand side research driven, but there is a need to analyze more and more data. Recently, we just published the dashboard, the analysis on gender, but we are now finalizing the analysis on districts level, and we are going to do in agriculture in different areas in order to get more insight, which are going to contribute to the regulator, which are going to contribute to the financial service provider in order to understand exactly what type of product and service that might be there. My last consideration is related to the dissemination of information. It is important that the way that we disseminate information, we need also to see how we disseminate for female and what type of channel are we using for that one, either for digital literacy or either for financial literacy. It is very crucial. I invite you all to get more information on FENScope, which is in our webpage. You can get more data and more information for the general study. Today, our intention was more to have a discussion on the gender lens for the FENScope. And I thank you for this opportunity to share some slides that I had at the moment. Thank you.
Thank you so much, Selena, for your presentation. And maybe in the interest of time, we'll hold questions and move directly to Betty's presentation to compare the results of Zambia.
Okay, thanks a lot. Selena's covered a lot of good ground, and we have some interesting similarities. So I'm going to zip through the first 2-3 slides and talk about that and concentrate mostly on the gender differences and what we think we should do about it. I want to acknowledge and thank specifically Mondato for its groundbreaking work on digital finance worldwide. I've been following them for a long time. They're out at the edge of what is going on in the world. So please do pay attention to them and check their website. The Bank of Zambia has provided the data and materials for us, even like up to now, they're giving me things through my colleagues sending me messages. And we want to acknowledge our funding partners, which you'll see at the bottom of the slide here, but particularly similarly FCDO and CEDA, who finance us as well as Mozambique. The next slide, please. Zambia, this is what Zambia is sort of like. This reflects the next photo, or sorry, Ariel, can you change the slide? Thanks. So this is really what Zambia looks like. The population is 18 million, 53% is women, and about the same percentage is above 26 years old. So you can see that half the population is children and youth. About 60% lives under the poverty line, and almost all of those people live in rural areas. Of the adults, there are big gaps in access to goods and services between rural and urban areas. We're doubly landlocked. Mozambique is one of our 7 neighbors. Infrastructure and transport is really important. The country is pretty well locked into export of copper. 75% of our exports come from there. So there's some upsides. We have a lot of water. We have a lot of land with forests and wildlife. We have exceptional options for agriculture and mining. It's secure, it's peaceful. We have democratic transitions in Zambia, which is unusual in Africa. But the challenges are really for financial inclusion. Telco infrastructure is a problem in a big country like this. Cell access, long distances, low densities. There's few financial institutions close by. And there's a lot of distrust in the financial market, as well as gaps in financial capabilities. Next slide, please. This is what the next slide is going to show you, what is happening in the FinScope. Literally, the data collection finished in November, and they processed it all in December, and we're still pulling it apart for the next few months. But what you can see is that financial inclusion increased by 10.1 percentage points, and that almost 70% of adults were financially included. And the exclusion declined. The big change was mobile money. when it quadrupled in the 5 years. So now I want to talk a little bit about what that means. The savings by the majority of respondents, they kept, a third of them kept it in their mobile money account. The electronic payments went up from 14 to 48%. Financial inclusion in rural areas is 83%, but only in rural areas 56%. So it means that the variance is increasing. It's bad. We need to address this rural gap. So now let's go on to the formal and informal overlaps, which your circles will look similar to you because they were also on Esselina's table. And what you can see, formal inclusion is pretty high, but it's high because we're including digital financial services. The banks actually serve 20%, but only 2% use them only. The combination of other services very, very high. And so the informal sector, the ones who use it most frequently, interestingly, are those who are salaried workers like me, and those who are the lowest income households. So they're both using them, which is very interesting. They saved more than 5 years ago by 6%, but they've dropped credit by 2.4% and remittances went down by 1/3. So this is what happened in the last 5 years. And so what you see is people are saving more, and they're saving more because, and they also have doubled the insurance. But what's happened, and doubled insurance to 10%. But what is happening is people are trying to figure out what's the way to manage risk better. And there's also been a lot of financial education on savings. And it appears that people are actually starting to pick this up, especially in the age group of 25 to 34, who are interestingly the biggest savers. So now let's talk about women and men and what the gender gaps are. So that's on the next slide. You can see that from 2015 to 2020, the gender gap dropped a bit from 3.8% to 3.3%. But the formal financial services gap dropped quite a bit from 10% to 5.8%. Bank gap is 12.4%, and financial literacy is 4.7%. What you do see here is you see the microfinance difference is 15.5%. Insurance differences is the same. Capital markets participation, the gap between men and women is 26%, and pensions difference is 30%. So you can see the more formal the service gets, and the smaller the group that's actually engaging in it, the higher the gender gap is. It's a problem. We have to figure out what we can do about it. Now, there's also this interesting thing that's going on, that there's some things that are higher for women. So informal financial services, women use them more than men do. And that means what we see from that is that women perceive informal financial services, which means things like chilimbas, things like savings groups, things like village banks, they perceive them as an easier entry point to understand and learn about financial services. Then with mobile money, we were very excited to see this. Not only do we see quadrupling of the use of mobile money, but women are using it almost 1% more than men are. Why? We think that, we're going to find out more, but we think why it's happening is because it's secret, because it's individual to the person who has the phone, and because they can actually keep money there secretly or keep it there more safely than if they were going to keep it at home or try to keep it in a bank or financial institution where the information is more broadly available. Women are engaging in financial decisions more than men. And for us, this was an extremely interesting finding. We need to dig into this and figure out more and figure out why, because it's going to be really important. Now, women are less financially literate. We need to do quite a bit of work on this. And they're also generally less financially healthy than men. So they're more vulnerable to risk and to needing money and not being able to find it or have it. And so women are also more likely to be dependents. So as they're dependents, they do depend on others for money. And so they're less likely to have money of their own to manage as the process. So all of this is happening, and it's for us very interesting, particularly the things where women are actually higher than men in just financial decisions in other areas. Next slide, please. So what do we think needs to get done? You can see that the Mozambique study has some similar results and similar implications. So the drop in formal financial services and high gender gaps and significant overlap tells us that formal financial services have a lot of work to do to make their products more client-centric and accessible. Regulators may need to push formal financial service providers to get better about this and disclosure and addressing client problems, which is a big gap here, and to simplify the rules. Digital finance is really working and it's growing really, really fast. The gaps are cell towers, cell phone ownership. Both of those are being worked on. We just looked at the data just now and we see that the total people who own a cell phone out of this sample are 61%, and about 70% of those are feature phones. But the gender gap between men and women in terms of ownership, it's not too bad. It's about 7%. So we have to start looking at that and see what we can do about it. Product client centricity is important. And we need to be learning from our neighboring countries and FSD. So we're going to be spending quite a bit more time talking to Mozambique and saying, okay, so what can we borrow and use here? So strengthening the use of digital for financial services is fundamental, and helping people understand what a product is, what a claim is, what an understanding is, and making sure that the products are actually suitable for their lifestyle, for their circumstances, and for their cash flow circumstances, especially in rural areas. So the increasing gaps in rural areas are a significant worry. That's where the spatial challenges are. That's where poverty is highest. That's where cash flow patterns are most erratic. So we need to spend a lot of time with rural households and microenterprises in those areas, financial services, financial education, outreach on related services and value chains. This is especially possible because the government's just been putting up towers for the last 3 years. And it looks like they're going to reach about 90 to 95% within the next year. So the signal is there. The cell phones and the services need to come next, and agents associated with them. Now, finally, worldwide evidence shows that the earlier one that starts to be financially educated and start with money, the better and more financially healthy is the individual and the communities. So we need to do a lot more work to engage children, youth, women in how do you really understand what's going on here? You know, I mean, and what we found is that the numbers are low because we aren't getting as enough variation into specific subgroups in terms of learning. Now, fortunately, the government's going to introduce comprehensive financial education into the national curriculum for grades 8 to 12 this year and grades 1 to 7 next year. And we've been a big part of that. So we're very excited about it and expect it to move. I think we can stop there. Thank you very much. I zipped you through Zambia. And I hope that you, and this presentation I've just given with the additional statistics will be made available to all of you from Mondato. Okay? Thank you so much.
Thank you so much, Betty. I thought those two presentations were really fascinating, and I'm struck by something I wanted to pose to you and Estelina both, which is that the financial inclusion over the past these 2 years studies has been driven so much by mobile money. Yet we also know that women have less access to phones. And then therefore I'm encouraged and also slightly puzzled that the gender gap in the case of Zambia actually narrowed, and in the case of Mozambique didn't worsen. And I was wondering how you attributed that to what you attributed that. I think part of your answer, Betty, you mentioned that women are actually better at using mobile money. So I don't know if that's part of the answer, but I would love to hear both perspectives if you would address that.
Estelina, why don't you go first?
Yeah, I can go first. Thanks, Christine, for this question, which is really coming for what we found in our fence scope. Really, we have to give a big proud to the technology. I think we are having this reduction of financial inclusion due to the technology, and in this case, for the mobile phone. It is clear that it is also sure that women in this case are the ones that are not having a huge access or big access on cell phone. So the question that you are setting to us is how can we reduce this issue of access on phones? And there is a big discussion. Maybe Catherine will also come in that discussion. There is a big discussion do we need to give a cell phone for free, or do we need to add a cell phone as a product within as a financial service product within the whole system, as we are doing with pay-as-you-go for solar products? So I do think that financial service provider, in general, they need to discuss this and also to see opportunity. I think that if we give opportunity for those females to have a cell phone, and within that cell phone we put an appropriate product that is solving a specific problem that they have, and also include the financial education and the digital education, we are going to give a huge contribution. In the case of Mozambique, I do think that we are now in the moment to discuss what type of solution, what type of product are we putting in the mobile money, because majority is cash in and cash out. But I think that we need to see a mobile, to discuss how the mobile money can use for other type of product, and which one that I can do. Are we going to continue only using for China? Are we going to add other things? So I think those discussions that I think we're in an appropriate moment in the country to discuss. In terms of access of the phone, I think that we leave to the financial provider, and maybe we can think in things of pay-as-you-go or related also we're doing in the solar, and also to have access. Myself, I'm not more in favor to give distribution for free of charge of phone. It's my personal thing. This is why I'm thinking this pay-as-you-go model and having maybe affordable price. I think that one is another issue, because I do believe that they're coming to this free of charge because sometimes those phones are very expensive. If we have cell phones that are affordable for them, I do believe that I will be able to buy step by step. Thank you.
Thank you so much, Esselina. And I guess it also then raises the question of how do we change the norms around social phone usage that were presented earlier by Catherine and Abigail, but that's a bigger question for another time. Betty, how would you address that question?
I'm conscious of time, so I'm going to answer really quickly. We're doing an experiment. We distributed 44,000 cell phones to poor women in 9 districts of each of 4 provinces, along with we distributed a cell phone with a free SIM and 3 months of time, and a full day training on how you use a phone, and a solar charger for their phone as well, and registration for mobile money, and training on mobile money. And now we've cut it loose and said, you have mobile money, you have free access to information on COVID, you have free access to information on markets. Now let's see what you do with it. We're going to find out. And I want to thank particularly Sita, who came through the doc and said, yeah, we want to give you a lot of money to do something like this. So I want to thank them very much for the contribution. And we'll let you know in a year and a half. I'm conscious that we haven't given my other colleague any time. So
let me turn to Sophie. Sophie, what do you make of the general trends across sub-Saharan Africa, and how do Mozambique and Zambia compare, especially with respect to gender gap and digital divide? And if I could ask you too, maybe to address if COVID-19 the pandemic and the lockdowns have been a factor in what we're seeing in terms of increased access and usage to digital financial services.
Okay, thanks a lot, Christina. Yeah, I mean, when I was thinking about this, looking at the data which Esselina and Betty presented, and looking at sort of more general data sets, and I based this off the GSMA 2020 Connected Women report, which has really nice stats. You can see that what particularly Betty has found in Zambia seems to be a much more a much more positive outlook than we see on the data more generally for the continent. So over the last 3 years, there hasn't really been that much change in the gender gap and the digital divide. So mobile phone ownership has been 13%. There's been a 13% gap between men and women, and that's jumped up to 37% for mobile internet usage. What the report has found is that women are 20% less likely than men to own a smartphone. And even when they do own a smartphone, then the range of services that they're accessing is much narrower. So this brings us to the discussion and the point around, it's not enough to just own the technology, you have to also be able to engage with it and to use it meaningfully. And I think that the work that FSD Zambia is starting is going to give us a really good insight into how women engage and what kinds of behavioral changes we can see from facilitating or subsidizing their access to the technology. We know that the barriers to women's digital inclusion revolve around affordability. We've also touched on lower levels of literacy, financial literacy. We've talked about the importance of financial education in ensuring that women have equal access to digital tools and solutions. And more generally, their comfort level with skills. Regulation plays a big role as well, obviously. And I think that just to rebound now onto your question about the impact that COVID has had, I think it presents opportunity. I'm not sure that crisis is necessarily the best time for policymakers and regulators to think outside the box. So I think what's going to be really interesting is to see to what extent the gendered constraints that we know about that impede women's ability to take up digital technology have been addressed by those policymakers and regulators as they rush to make to increase women's access. I'm not sure that we have sufficient data on that to be able to speak to it with any authority at this point, but I would imagine over the next 12 months we will be able to see what kind of access worked for women, and what was just business as usual and carried on excluding them from that. So I'm not sure that we're able to say right now to what extent it's going to have made a meaningful change.
Thanks very much, Sophie. I know we're out of time for our panel, so I'd like to turn it back over to Judah. Perhaps we can open up a question or two to the audience, or just wrap up.
Yeah, it looks like I'm not able to turn my video on for some reason. I've lost that ability, but my voice seems to still be working here. So, you know, I think rather normally we would have some closing remarks, but I think the discussion is so fascinating that I would suggest that we take a question or two. There's a question here coming in for Betty. Betty, I'm sure, I assume you're able to see it in the chat, but I'll just repeat it in case anyone's unable to see it. Would you be compiling the full cost of this experiment, phones, training, 3 months airtime, solar charger, etc.? I ask because this is the exact kind of thing that providers really need to understand the cost of, such as access program, and be able to assess and model what revenue they can generate from such a model. Many thanks. So why don't we take that question if we have time, perhaps one more, and then we'll close out the panel and session. Thank you.
Okay, that's a quick answer. The answer is yes, we are. And what we're looking at is we're looking at all the bits and pieces of the activity, and we undertook it with all 3 mobile money operators and with both of the regulators, both the telco regulator and the financial services regulator, the Bank of Zambia. And so they all were participating. So we're all looking at this and saying, what are we learning? And we're going to be following up with all of these people who have cell phones and saying, okay, we'll call you up. Are you answering the phone? What are you using it for? So we're going to follow them up over the next 18 months and see what happens. And we actually have banks that have said, maybe we want to be lending to savings group members to buy phones and see, you know, can you subsidize a little bit? Let's see what happens. So we're exploring this. There's a lot of interesting things going on. Thank you.
Okay, fantastic. There's a question here for Abigail. Perhaps I missed it, but did you segment your groups into younger and older couples? Did you see any differences in their behaviors and willingness to change?
That's a good question. We haven't looked at the role of age in this data set yet. When we were looking at the social norms, we were focusing on the social norms that women recognized and the social norms that men recognized. We didn't also segregate into age groups. Based on other studies I've done, which aren't about financial decision-making, but are about social norms, I'd say it's highly likely that the older, both males and females, have more conservative social norms. And I'm glad to be nudged in this direction, because in the other study, that is one of many findings that suggest that things are changing. You know, so the social norm is the same whichever age group you look at, but there's more tolerance of deviation from the social norm among younger people. That's what we found in the earlier study, which was about arranged marriage in Pakistan, by the way. Yes, this is certainly something that would be worth looking at. We just haven't done it yet.
Okay.
Thank you.
Thank you for the clarification. All right, with that, and well in time, and we managed to conclude with 2 minutes remaining here. I want to thank everybody once again for their wonderful participation in this session. At least from my perspective, it was really fascinating and many good observations. And I think we're going to stay tuned to see how the studies bear up in the future and showing what the impact has been in, from the pandemic. I think there's some really interesting early signs that in some cases, some of the changes in terms of expediting change that, when it comes to addressable market and uptake, have actually moved things along a lot faster than they would have otherwise. And clearly there's been a lot of tragedy throughout the past several months, but to the extent that there may be sort of a faster movement up the digital curve, that would be one silver lining, amid the many challenges. So we're going to stay tuned on that and report on that in the future. Once again, I want to thank everybody for participating. In terms of our panelists, many thanks for your time. Excellent, excellent sharing of findings and information, and all the attendees as well. There will be a recording made available of this session and presentations. Everybody who signed up for the webinar will receive next week's newsletter. They've been registered, and so there will be a recording link made available in there. I'm sure if there are additional questions, you're welcome to funnel them through. And we'll pass them along to the panelists and to the speakers. And we will also be making an announcement in due course on the next webinar. Stay tuned. We're still considering the topic to be utilized, to be chosen, but that will be announced once that decision is taken, as well as the details of the date. So once again, thank you everyone very much for your participation and attendance, and we wish you a fine remainder.
Thank you.